Our market analysis show for today, Sunday, the 11th of December 2022. Apologies for the last 2 weeks. We haven't run TTR for the first time in 6 or 7 years due to our Bali trading retreat. The team was in Bali trading together and we just couldn't get everybody out to run the show. So we do apologise for a couple of weeks off, and we'll be back into it for this week and next week. I think we'll be back before we have a break. There will be no show on Christmas Day. I think we're in this week and next week, and then we'll have a break through to early January. More on that for you guys next week. Good show today. We're going to hear from Alexis on fundamentals. We're going to hear from Lloyd on currency strength matrix, and we're going to hear from Gordon on the US market overview as well. So lots coming up. Without further ado, let me introduce Alexis and her view on fundamentals. Alexis, this is still a fundamental-driven market. Lots going on. What are we talking about this week?
Hi, Paul. Thank you very much. And well, that's a really interesting market. I think there are a lot of speculations going on quite a lot of stuff. And I think the first thing I would like to look at is usually the dollar yen. Let me just share my screen and let's just take a look. So there has been a lot of talk about whether or not the Bank of Japan will finally stop easing. All right. So, there are just some articles I'm just going to pop up, just to kind of have a feel of where the Bank of Japan is at. This is just posted, I think, 10th of December, so just yesterday. All right. And Bank of Japan policymaker says it's too early to discuss easing exit. All right, so if we just briefly really go through the article, it talks about that Japan still wants to look at inflation being holding at a stable 2%, even though it's actually now about 3.7%, but they are expecting inflation to come down, to stabilize kind of at 2%, which is what I think their so-called target is. However, I think it's just a lot of noise out there. I think behind the scenes we have the Bank of Japan shifting the currencies in a really interesting way. All right, and why do I say that? It's really simple. If you look at the charts, right, sometimes despite the news and all that, I think the charts is quite revealing about what it tells us. So while I don't think that the Japanese yen will strengthen super a lot because of its Bank of Japan stance, I don't foresee it weakening very, very aggressively as well. I think what's going to happen, especially when we are ending the year into Q1, is the Japan kind of stabilizing into a kind of a sideways motion. While the Bank of Japan seems really pretty okay with letting the speculators think they might or might not be increasing rates, they might or might not be easing, because I think they are pretty happy with where the Japanese yen is. It's not up here. All right, it's not up here where this was probably a place where they don't really want to be, where the Japanese yen is too weak, and their corporate, I would say that the companies in their country are making a lot of noise, complaining about the weakness of the Japanese currency. Yet they don't want it over here where the Bank of the yen is too strong, and it affects their import export. So it's finally come into I would say a sweet spot, right, where it's not too strong, not too weak, and it's somewhere where I think they can live with. And I think this is the range that we will kind of see whether in the next at least couple of months whether the Bank of Japan will keep it in here. So in a way, I'm probably going to just come out right and say that the trend trading for the bank for the dollar yen, I think is going to end soon. All right, I suspect it will meander over here for quite a while. All right, because of it's like there's one party saying this and the Bank of Japan is saying another thing, and yet the inflation figures just don't quite seem to fit where they want. If they're looking for a 2%, and we all know that inflation, the higher it goes, the harder it is to pull it back down, right? Every other economy is facing the same problem. They have to, their so-called tool, their only tool in their basket is interest rates, and they have to bump up interest rates. We have never seen interest rates this high for a long, long time, right? It's now at 4% for the US, 2% for the Euro. I think Canada is 4.25%. Australia is currently 3.1%. So interest rates have not been this high for a very long time. All right, so is the Bank of Japan still going to stubbornly hold its minus 0.1%? The only way it will be able to do that if the currency kind of stabilizes at a sweet spot where the government can sit with, right? And and there's no news. There really is no news that they are going to increase interest rates. So I think while the currency sits in this area, I don't think there's going to be any changes for the policies yet. They're just going to come out news once in a while saying it's okay, it's okay, it's okay, right? So I think this is going to be an interesting place for the Japanese yen to kind of range. It's about $5, 135 to 140. I think it's somewhere it can tolerate and see whether the inflation can change or not. All right, I've scrolled through a lot of articles. It's like 40% of them saying that Japan is bound to increase interest rates, and the other 60% is saying that nope, they're not doing anything. So it really is like a 50-50 guess at this point. Now, as always, when we want to take a look at the dollar yen, I always like to take a peek at the US government bonds. All right, so this is the 10-year bond yield chart. You can see this big retracement that has come down. If we just put a line over here, you can see this very nice bounce off this horizontal level. Again, while the US still has another interest rate increase going on in the next reading, I mean, it is speculated that they will increase its interest rates to 5% in the next reading. There's almost a 1% difference. Again, it depends on how aggressively they get there. Are they going to just increase 0.25, or are they going to jump to a 0.5? I suspect it's the former. They might just do a 0.25 to 0.5 increment as compared to their previous increments of 0.75 per pop. All right, inflation has dropped down to 7.7%. Well, it's not the best. All right, I think it's really hard. I feel it's really hard for inflation to come all the way down to 2% in the next year or so, because as long as that conflict in Ukraine and Russia doesn't end, there's always going to be this eternal question mark about the oil prices, right? The oil prices, the energy prices are not coming down, and if energy prices are not coming down, how then is inflation going to come down if so many things actually depend on energy? All right, so I seriously doubt that in the next year inflation will happily come down to 2%. I suspect it's going to come, it's 7.7, maybe a 5%, but as long as the energy prices don't change, it's going to be hard for the rest of the economic factors to change. It's like a domino effect. All right, so I suspect 2022 will be a very, very interesting period. To trade, I think we are potentially going to see moves in one direction for certain overextended countries. And just based on overextended, if we just scroll through the currency pairs, I'm going to go to the weekly time frame to make a point over here. All right, from a fundamental perspective, it's more and more interesting to trade now because there are a lot of currency pairs. I think I've spotted a few. Aussie Swiss, you can see that, if I'm just scrolling all the way back, this is a chart all the way to 1984, right? Look at where prices are at. They're all at support level. Aussie yen, okay, not quite interesting. Aussie dollar, you can see also prices are all at the bottom half of the chart. If you just cut the chart in half, it's all at the bottom half of the chart. So it's very, very interesting for fundamental traders because we are finally starting to agree with technical traders on some point, right? Because technical traders trade from technical indicators, overextensions, whether it hits a support and resistance. And all the more at this point, it's quite important, I think, as a fundamental trader to recognize that and understand the amount of volume coming when it hits a key support or resistance levels, right? And a lot of currency pairs are so overextended. They're either at the bottom of the floor or they are top of the ceiling. So I feel that those currency pairs are going to be the interesting ones coming into 2023, because it's going to be either a shoot to the moon in one direction, right, or it's going to be a break of the ceiling to the other direction. So if we just scroll through a couple of the pairs, I think there are some currency pairs that will be interesting. I think the Euro CAD, for example, has started in a really aggressive bounce. This is a weekly time frame, by the way, off the 130 level. It's been going up for the last couple of weeks. This is one of the pairs that will be very interesting to look at, because if it comes down anywhere to the 135 level, there is a huge opportunity to trade it back towards the top. Again, because it's a Canadian pair, one eye on oil, right? One eye on oil, and it can give us a very key direction to go. So I think in 2023, we have to kind of pay a bit more attention to Ainslie, the oil lady. All right, look at Euro Swiss as well, bouncing off a key support level, hovering just above it, So if we can catch these currency pairs and try to find that fundamental reason for them to kind of be in line with the technical traders, I think it's going to be a very cool opportunity. Euro yen, I think Euro yen, we've got to wait for Bank of Japan to make its decision. But again, look at the very nice resistance levels is bouncing off. All right, Euro dollar, okay, it's bounced off it's bounced off the $1 mark and has never came back since, all right, for the past at least 4 or 5 weeks. So again, these are currency pairs, the overextended ones that I feel is going to be really interesting because we are waiting for that U-turn. And as usual, to wait for that U-turn is like really takes a long while and long patience to do it. So I'm quite excited about 2023. Again, as long as the conflict in Ukraine and the conflict in Russia doesn't let up, I feel it's going to be really hard to just pick a direction and go. So really, really careful, not just say, 2023 comes by the bottom, just buy straight away. I think it's going to take a lot of push in one direction or the other. So my eye is on the key policy decisions that come up. We have elections coming up as well. So what am I looking for next week? I think just to be on the safe side, I'm still looking at a pound kiwi. All right, I'm still looking at the pound kiwi just based on fundamental perspective. I think pound has a bit of weakness, kiwi has a bit of strength overall in the entire grid of economic statistics. But look at the pound kiwi charts; they're so ugly. I'm really sorry for the Brits and the Kiwis, but it just looks very choppy. But what I am looking for is I'm looking for short-term moves to the downside, while the fundamental statistics are in my favor. I'm not going to hold anything too long. All right, fundamental traders, we like to hold our stuff a bit long, but now is not the time to hold long. I think now is the time to follow really strictly to your technical disciplines, your trading strategies, and just take your exits as they come, because we are about there. Something's going to change, but we're kind of not there yet. So a lot of patience. I would suggest a lot of patience. All right, for those of you who are patient, following your trading strategies, your exits and entries, I think it will pay off a lot more than catching a position and sitting on it, because the markets are so choppy right now, while all the policies are trying to, all the policies are changing. You can actually see the changes in the way the interest rates are slowing down, in the way the PMIs come up, and in the way that every time a PMI reading comes up, the market swings in another direction so wildly. So this is a really key sign of what a lot of traders are looking at, that volatility is up, and this makes it trading into 2023 quite exciting. All right, just to catch that key policy decisions that comes up, and then we could ride the wave for the entire year. So a bit quieter for the December side. Looking at pound kiwi on a short term, but nothing to hold for months and months. What I'm really interested in is what 2023 brings for us. We're winding down the year. Hedge fund managers are covering their positions. So be a bit careful trading into the end of the year. It can be a bit tricky, but I think be prepared to open 2023. I think it's going to be a really exciting year. Yep. And let's just see what the technicals have to say, I feel. So I think that would be a Lloyd thing. I don't know, Lloyd, it should probably be a really exciting time for you. It's overextended everywhere.
Hey Alexis, how you doing? Thanks for that. Look, I'm going to get you back on the end of year show for Christmas. I want to have a chat about China opening and the effect of that on inflation, with inflation at 1.6% in China. Will that change as it opens up and more demand comes in?
Oh,
and
yes.
will that start to unhook some of the supply chain issues there are around the world, which means we're coming out of China?
Yeah, that's something.
And will it start inflation in other countries in a downward direction?
Yeah, I mean, I think that's something that I probably will be discussing in tonight's Sunday show with the group, because China opening up is another exciting thing which will turn currencies in one direction and gives us a little bit of move, I feel, instead of this sideways choppy motion that we have.
Yeah, I think you're spot on the money there. Thank you very much, Alexis. That's a fundamental view from Alexis. Thank you for that. We're going to have Lloyd come in and do currency strength matrix. Lloyd, as Alexis was saying, overextended markets, is it good for you?
I'll still relate back to whether it's overextended or otherwise. I mean, if there's a trend, then the technicals will show it, and I'll be there to trade it. Yeah. So really, overextension doesn't really concern me as much, unless in the weekly time frame it has really hit a strong and obvious horizontal levels. Then I might be cautious about it. So with that, I'll be sharing my screen. Oh, what am I looking at there? Right, so with that, the top of my list that I really wanted to trade is the Swiss franc. Yeah, so you can see on the Swiss index is that price has clearly broken off a horizontal level. This is a really strong levels. Even that, I think mid this year, I also highlight this level. Once price break, very nice. So now price has indeed break and it has performed a retest. Bear in mind that I'm on the weekly time frame. So on the daily and 4 hour, it will even look nicer for the chart. So Swiss to me is actually the strongest of this week that I should be trading. Coincidentally, Swiss is always linked to gold on the fundamental side, so there might be some relation there. Now, the next on my list is actually the British pound. It's displaying the very same setup, exactly the same setup as the Swiss. Yeah, just not as nice, but exactly the same setup. Price has broke. In fact, 2 weeks back over a bit, and then last week I will consider that a retest on the weekly chart. Yeah, so these two are actually on my list to trade. Now, on the other hand, the euro is actually trending really very nicely. I don't see any horizontal levels on the way. So my opinion is that euro should still be rising, but really in time for a retracement of sorts. I still have ample space to move up. I think, yeah, from the 4-hour chart, 1-hour chart, we do have plenty of space to trade it. Yeah. So the Aussie also displays the same tendency. You can see that a lot of charts are actually having a weekly break and retest. Yeah, very nice to trade. Yeah, which has a very clear-cut direction that we can actually make use of. Now, on the other hand, the yen, now this is a bit finicky. In fact, I will actually agree with Alexis that on a weekly, we can see that 1, 2, 3, 4, 5, 6 bar. It has trending 6, very nice trending bar. Last week was an inside bar. Yeah. So I can classify this as a trend, but it is fast hitting another horizontal level that is that it has displayed in the past. As such, the coming week ahead, it might be in a huge range instead of a very nice trending move that we have. Now, doesn't mean that we can't trade it, we can't, but I'll treat it more as a breakout move instead of a usual trend trading occurrence. Now, the Kiwi, I'm reluctant to trade Kiwi. Price is really hitting into a nice looking horizontal level. I have no intention of trading straight into a horizontal level. Neither do I want to do a reversal. As such, the Kiwi, I'll leave it out of my list to trade. USD is really still diving. It has performed a deep dive ever since October. So it's still diving down. Frankly speaking, it might be reaching the end of its dive. Seasonally, I do understand from Ainslie that it might be hitting the end of it at the end of December, or we shall see where it goes. As for technicals is concerned, for me, is that it still have ample space to actually go down to continuously to weaken. Last on my list is actually the Canadian index CAT. Same as the dollar, it is still doing a dive, just that it is not so one-dimensional. Yeah, so it is the weakest of my lot, the USD and the CAT. So this is where our trading opportunity comes in. We can trade the strongest and the weakest. So I'm pairing the CAT and Swiss. Very nice downtrend movement. You can see that it has very, very weak retracement. Yeah. So for the CAT Swiss, I'm just waiting for a simple retracement back to previous low, and then I'm prepared to short it. Next on my list is actually pound dollar. Now pound dollar is a bit wavy. Yeah, so hence I'm waiting for a standard break and retest. Now the next on my list is that I tend to trade those in the middle of my list as a breakout movement. Now, although I term it as breakout, but the same kind of setup, I'll still wait for it. So Euro Yen, I'm waiting to trade both sides. Just waiting for price to give me a very clear break and retest of either the top horizontal level or the bottom support level. Yeah. I don't particularly see this as a very, very strong downtrend. Yeah. Price to me is really just in a really messy environment. As such, I'm willing to trade a breakout when it happens. Yeah. So these are the three currencies I'm waiting to trade for the upcoming week ahead. That's all for me, Paul.
Cheers, Lloyd. Thank you very much for that. We will watch them with interest. We will see you back in January. Thank you very much for your support through 2022, and we'll get you in for the Christmas show as well. More details will follow that. Following that in the next few days. We're going to next go to the video from Gordon. Gordon is going through a US market update. Thanks again, Lloyd. And here is Gordon and the US market update.
Hello, everyone. Good to connect with you again. Missing all of the fun times we were having in Bali, and it's really great to meet so many of you in person, and looking forward to doing that again as soon as possible. We've got some really interesting stuff going on simply because the markets made a big move right at the end of the U.S. markets made a big move right at the end of the day, or the end of the week, I should say. Rather early on in the day, but they kind of held that trend. And I want to show you what drove it and where it's likely to go. So you see here on Forex Factory, the core PPI and the PPI month over month. That's the producer price index. It's a sort of wholesale version of price increases. And people use it to measure whether or not inflation is continuing or receding. The expectation was they were going to come in at 0.2%, and they came in at 0.3%. The core PPI came in at 0.4%. So both of those signal, hey, inflation hasn't really gone away yet. Now, the Fed has been saying, yeah, we think we might be getting close to the top of our interest rate stuff. We might be able to slow a little bit and maybe not raise so much through 2023. That's kind of, I think, what they were hoping they could get away with, and what they thought they would do. And on these numbers and some earlier numbers that came out during the week, the U.S. markets are basically saying, we don't believe you. We think you, Fed, are going to have to raise rates more. And we don't know how much, but at least a little. And therefore, this is what they did. So these are the futures for S&P 500 in the upper left corner, NASDAQ right below, the U.S. dollar index, and the bond futures. As you can see, the news came out right there at 21:30 Singapore time, and big old drop, recovered really fast, but ended up going right down to that low. This is the S&P 500. It dropped hard, came all the way back up, but then came all the way down to essentially the lowest place of where the initial reaction was. Whenever I see a news reaction go like this, it just really moves fast, and then it recovers some or most or maybe even all the way, but then comes all the way back down to the point of most intense panic in the first overreaction. That is I find, very, very strong indication that move is going to continue on further. So given that we have the whole weekend, it's hard to say whether or not people will, sort of shake off the cobwebs and do something different. I believe what's more likely is that the U.S. stock market will continue lower. I got one more chart that will also help confirm that that's possible. I don't know how much lower it will go past that. There's always I wrote a couple articles years ago on the Santa Claus rally. And there's always a moment between December 15th and December 30th where the market tends to bottom. And that bottom is such a fantastic buying opportunity. Even in the years where it goes down, it's still, you can get in and get out with a short swing trade. But if it's a recovery year of any kind, then that tends to be a really good move. And so this is setting us up for the bottom of the Santa Claus rally. And that's what you're going to want to watch for next week. And if you're watching stock indexes, U.S. stock indexes, that's what you want to watch for. Where does it seem to bottom out next week? And, maybe towards the end of the week, maybe even the beginning of the week after, but somewhere in there before the weekend, after it comes out of the Christmas weekend, since Christmas is on a Sunday, the days after Christmas are likely to be bullish all the way to the end of the year and into the first couple of days at least of January. Now, if it turns out that January is not, it's not always this way, but it's that way about 70% of the time. And if it turns out that January, the first 2 days are, big down days, okay, that's probably going to set up for a bad year, a bad entire year for 2023. But that's not what I'm expecting. I'm expecting that we're going to see some sort of a dip between now and the end of the year, and from that dip, we're going to rally pretty good into the middle of January. That would be my expectation, because that's the way it happens. Some variation of that tends to happen more years than not. Okay, now then, notice what happened here also. The bonds went down. Well, this is because people are expecting interest rates. Interest rates are going to have to go higher. There is no way that markets, bond prices can go higher and stock prices can go higher if investors believe that interest rates are going higher. They just, it's headwinds. They can't push that far forward. But if interest rates go higher, there's one thing that's going to go higher with it, and that is the U.S. dollar. So any U.S. dollar denominated currency pairs are likely to do well, such as the dollar yen down here in this corner. This is an hourly chart, and you can see the reactions got going right there at that same time as that news came out. And, dollar yen ended on a, close to the high, but not quite the high. What's really got me surprised, though, is that the Australian dollar and the U.S. dollar also trended higher. See, I would have thought that the U.S. dollar, if anticipation of more interest rates, then, it would be outstripping the Aussie. But the Aussie, rallied even more than the U.S. dollar. So what that says to me is that investors are saying, yeah, RBA, you're going to have to raise rates. That's all that, U.S. is going to sneeze, you're going to catch COVID or whatever. I don't know what the right analogy is going to be there, but clearly investors are expecting Australian dollar to strengthen. And that's an interesting trend because it's creating a couple other things. Look at this Australian Canadian Aussie loonie. I mean, wow, what a trend. Buy that dip, right? And the Euro Aussie just coming down the other side. I mean, Euro's going to go basically where the U.S. stock market goes. And so those are some really interesting trends, I think, that are worth watching. The pound over the dollar, see, that surprised me a little bit, but notice it doesn't really look like the Aussie. The pound goes up, but comes all the way back down and then closes just slightly lower than where it was before the news came. So I wouldn't trust this upward trend on the pound to continue. That's just my read. I mean, I imagine some other guys are going to be saying different things about it, but I wanted to give you that take. And next week is.
We're just going to pause it here for a second and restart it, see if we can just deal with the lag. It's been downloaded, so this isn't a lag coming in from the US. It's just coming in from Sam's computer. So I do apologise for the wee stop here. I'll get you to start playing it again now.
Is the Fed. The Fed is going to have its interest rate decision. Everybody's expecting a 3/4 point rise, probably the last one. Many people were hoping that it was only going to be a half point. But now, after that news, I think the way the markets are reacting is like, oh, sure enough, it's going to have to be another 3/4 point after that. And then everybody's going to really listen close to see whether or not the Fed is going to, make noise about tanking, make noise that would tank the markets because they're going to have to keep hiking rates more than they were expecting to, right? So that's the stuff that's going down in the U.S. markets next week, and that's going to line up perfectly with this idea of a mid-December dip right in front of a Santa Claus rally. Now you can say, Gordon, wait a second. If they give out that bad news and they dip, then it's just going to go down the rest of the year. Yeah. I know. That's what you would expect. Statistically, it doesn't go that way most of the time. In fact, it's almost even more likely, better than 70% likely in a year where the index is down for the year coming into December, that it rallies at the very end of the year. That's a phenomenon. Now, the fact that interest rates might be raising still, that could throw everything off, turn it all upside down. So what you're going to watch for is after Wednesday. Whatever dip is going to occur in the market, it's likely to occur after Wednesday. It might be on Wednesday when they release the news and it just drops down. If you see the market is just coming roaring back up and heading higher, well, okay, there it was. That was the dip. The post-Fed news was the dip, right? I don't think it's going to come that fast. I expect, day or two will sort of wash it out. But whatever low is right there is probably going to be a pretty good buying opportunity for stocks and the corresponding currencies that are trending that way. Hope that's useful to you. Take care, everyone.
Thank you to Gordon, thank you to Lloyd, and thank you to Alexis for joining us today. Gordon, on the US market, fascinating stuff. Is there a dip left to buy at the end of this year and a bit of a rally to come on US markets? Got to say, I'll be watching that quite carefully this week as we get through the week. Lloyd on the currency strength matrix and Alexis on the fundamentals, plenty going on there. Often worth watching this live and then having a little look on YouTube and re-watching it. It'll be posted to YouTube not too far away. Thanks for your company. We got heaps in the room joining us tonight. Thank you very much for your company in the afternoon in Asia. It's been great to have you along, and I'll be back next Sunday night as we run another and final TTR. And for those from Accidents to Wealth, we'll have a little Christmas chat, I think, on the Thursday of the week after, about to wrap up the year, and wish you guys well for the year. In the meantime, there's time left to make 1 or 2 good trades. Don't panic, don't rush. Wait for good opportunities, stay calm, make good decisions. If you do that, it'll all work out at the end of the day. Cheers, everyone.